Welcome to day 9 of my stock market portfolio. So I still got my Ford shares, 235 shares at a price of 1091 average. Today it ended at 1070. Looks like all the stocks are going back up. So it looks like it was a market correction and not a market crash. And hopefully you were able to benefit from the market correction, from the dip. Is it going to continue to go lower? For those who want to buy, hopefully. For those who have already bought, hopefully it goes back up. So nobody knows. We can only watch, but we can prepare ourselves for both scenarios. We can prepare ourselves in case it goes lower, and we can prepare ourselves in case this was the lowest point. So how do you do that? Well, in my opinion, it's not to put everything in one place. It's always to leave a bit of cash available in case it continues to go down, so you're able to buy some more. But also participate in the current dip in case this is the lowest. In case this is the lowest dip and that it's going back up, that it was just a small correction, then you will have participated in it. If it continues to go lower and you have available cash because you didn't put everything in one place, you didn't buy right away, you didn't use all your available money to buy. I'm a little disappointed because I wasn't able to buy anything in this dip. I put an order on Bank of Nova Scotia at 75. I missed out on it by a penny. Procter and Gamble, it reached 78.5, I think. I missed out on it also. American Express, I was thinking about it, but didn't know which price to buy it at, and now it's gone back up to 94, and even it's going higher. My choices, I'm probably gonna end up buying some more GE because I bought some initially at 17. Now it's below 15, so I might buy some more GE. Might buy some New York Mortgage Trust and collect some dividends, almost 13%. But I'd like to stay on the Canadian exchange. I don't want to convert in US. I was also thinking of Rio Can Real Estate Investment Trust at 23. Right now it's at 23.40. The lowest today was 23.16. Pays about 6% dividend. 52-week high is 27. So this is more of a stable stock. So the potential isn't really in the price of the stock, but in the stability of the stock plus the dividends. Also looking at some Exxon Mobil. 52-week range was 74. Could probably put an order at 75, 76, 75 if I have to go US. And also I don't want to buy more GE because I already have some GE at 17. So in order to diversify, I would probably go with Exxon Mobil, and it pays 4% dividend. If Procter and Gamble goes below 80, we'll probably buy some. Right now I've got an available $998 that I want to invest with, but it's hard to buy something at a higher price knowing that it was much lower the day before, even though it's still an attractive price if you look at the long term. But knowing that the day before it was $2 cheaper, it's hard to buy it $2 more expensive right now the next day. Well, that, in my opinion, that's how I see it. But if you look at the long term, it's still most of these stocks are still attractive buys. Facebook also is trading in the 170s. That's also an attractive buy. Ford also in the 10s, but I already bought Ford. Cenovus Energy is also a good buy. 52-week low about 9, 52-week high 18. Right now it's trading in the 9s. ABX also, Barrick Gold, 52-week low about 16. Right now it's at 16.40. Doesn't pay much dividend though, so your gain will be mostly from buying and selling the stock. Goldcorp also trading at 16. 52-week low is 15, so not so far off the 52-week low. 52-week high is 23. So I wanted to show you the importance of, or the benefit or the advantage of buying stocks individually and by buying them at the right time versus contributing to an investment plan or buying mutual funds or giving your money to a portfolio manager. You'll probably make between 4 and 10% per year. But when you buy your own stocks, the potential to there's a better chance of making, you have more potential of making higher returns above 10%. Some people go up to 30% per year. So I just wanted to show you my past trades for the 13 months so you could see for yourself what kind of return I'm making. So I'm here in my Investor's Edge account. It's where most of my money is. I'll also go show you my trades on QUESTRADE. So here on Investor's Edge, if I look at the transaction history in the past 13 months, so you can see here, I bought a BMO, Bank of Montreal, May 25th or May 30th, end of May, sold it in October. So that's June, July, August, September. So that's 4 full months. Bought at 90.50, sold at 96.50. 96.50 divided by 90.50. So that's 6%. 6.6% in 6.6% in 4 months, plus $10.80 dividend. And I think it pays about 4% per year, so that's an extra percent. So about 7.5% with this trade in 4 months. So 7.5% in 4 months. With CIBC, I bought twice, once at 105.40, a second time at 104, and then I sold at 109.50. It later on reached 122, but whatever. Profit is better than no profit. So let's see how much return that was. 109.5 divided by. So we'll need to average it out because I bought twice, once at 105.40 and another at 104. But I bought more at 104. So the average price is closer to 104. So just for the purposes of keeping it simple, I'm gonna average it out at 104.75. So 109.5 divided by 104.75. That's about 4.5% plus a $15 dividend, which is about also 1%. So that's a gain. So that's about 5.5% return in about. So also end of May and end of September. So June, July, August, September. So 4 months also. So in about 4 months, made 5.5%. Actually, if you look at the time I bought it at 104, that's in not even 3 weeks. So in 3 weeks, I went from 104 to 109. So 5%, yeah. If we look at Common Real Estate Investment Trust, this stock I buy because it pays monthly dividend at about 12%, but now I think the dividend rate has gone down to 9%. So I sold everything. But yeah, so this I bought several times. I bought it initially at 14, but the ones I bought at 14 I sold at 14.60 later on. But I was collecting 1% dividend per month. Then I bought some more at 13.15 and at 12.35, and I sold everything at 13.53. So I made 9% from the 12.35 to 13.53. I made 9% in 3 or 4 weeks. So in less than a month, I made 9% on one trade, and on the other one here, 13.15, that was in May. So June, July, August. So in 3 months, less than 3 months, I sold 13.53 divided by, that won't be much, 13.15, about 3%. But I was collecting 1% per month. So add 3% to that 3%. So about 6% in 3 months. Plus, look at all these dividends I was getting. So 1%. So an extra 1% from March till January. So 9% extra above the capital gains. I made an extra 9%. If we look at Cenovus Energy, this one I bought some at 15. I'm still holding to the ones I bought at 15, but I bought some more at 9.05, sold it at 10.25. So that's 13% return from June 22nd to September 12th. So July, August. So less than 3 months also. So 13% in less than 3 months. But I bought initially at 15, so that was I guess I bought too early. And I'm still holding on to it. I didn't sell yet, waiting for the price to go back up. It's actually gone up to 14, as close as 14, but I didn't sell. Enbridge. So this one I bought also too high. I bought at 50. It dropped all the way to 43. Bought some more at 45. So my average is about 47.50 now. Collecting dividend though, while I'm waiting for it to go back up. Ford bought at 11.30, sold at 12.38. From April to October, so that's about 5-6 months. Made about 12.38 divided by 11.30. Made about 9.5%, plus the dividends that I was collecting while waiting, $18 and $16. So I collected dividends twice. I think it pays about 5% dividends per year. So if I collect it twice and then add an extra 2.5% over the 9%, so about 11% I made with Ford in 5 to 6 months. So as you can see here, there's a tax on the dividends that I'm collecting because it's a U.S. stock. So even if I'm trading on a tax-free savings account, in a tax-free savings account, because it's a U.S. stock and I'm not a U.S. citizen, they withhold tax only on the dividends that they pay out, not on the tax gains that I make by buying and selling the stock. But it's not a big deal anyways. It's a small amount compared to the dividends that I'm getting and the capital gains that I make by buying and selling. Then I got General Electric that I bought at 17. I might buy some more at 14.50. So I haven't sold anything yet with GE. GM. So I got GM here that I bought at 33.50 and sold at 39.30. That's 17% in how much time? From April to September, so 5 months. So in 5 months made, what was the number again? 17%? Yeah, so 17% in 5 months. Plus dividends. Received dividends twice. And I think GM also pays 5%, so it's about 2.5%. So about 19%, 19% return that I made with General Motors in about 5 months. HBC, the famous HBC. This one's been over a year that I bought at 13.50 about. I haven't sold yet. It's gone up almost to 13, but I didn't sell. Now it dropped back to 10 or even 9. It would be a good buy for those who are interested, but I didn't make didn't make a profit on it yet because it hasn't gone up. So this HBC and HBC, CVE, and Enbridge are stocks that I'm still holding on to. Home Capital Growth, bought it at 17, sold at 18. This one was an interesting story. Could have lost a lot of money on that one actually. Made 5 and almost 6% on that one in how much time? April, May. So yeah, 2 months, not even less than 2 months. So this one, it was trading in the 30s, dropped to 17. So in my eyes, that was a good buying opportunity. So I bought it at 17. The next day, it dropped to 5, and then it was moving from 5 to 8. So I should have bought some more at 5. Would have made a good return. But I was worried. Didn't know what was going on. I knew it wasn't a stock that was going to disappear, but I was still surprised to see it go from 17 to 5 in one day. So I didn't buy, I just held on to it. I was patient, and then news came out that Warren Buffett was involving himself with this company. So then the stock shot up, and it went all the way up to 19, I believe, but I sold it at 18. I was just happy that I wasn't going to lose my money, and so as soon as it went a little bit above 17, I sold it right away. So I made 6% in 2 months. That's good enough for me, considering what happened with that stock. So Kraft Heinz, this I just bought recently, didn't sell anything yet. Bought initially at 77, and then I bought some more at 73. I think right now it's trading at 71. Definitely a good stock to buy. Great company, not going anywhere, and it pays about 4% dividend per year, I believe. Coca Cola, yeah. So I guess it's past 13 months, so it doesn't show. But I bought it around 40, sold it at 44.50. Didn't make much here. 44.50 divided by 40.5, I believe. So yeah, about 9%, a 9% gain with Coca-Cola, and I collected dividends also. And how much time? So a month and a half. 9% or even 10% in a month and a half is not bad. Nike, here I have it. I sold it at 54, bought it at 50. Right now it's in the 60s. Actually, I had another opportunity to buy it back at 50 because it dropped again, but I missed out on it by a few pennies, and now it's trading in the 60s. So that's a stock I'm disappointed I didn't buy back. But 54 divided by 50 is 8%. So this is a stock I made 8% on, and also probably less than 3 months. Nestle was also less than 2 months. I believe I bought it at 67. So 73.50 divided by 67. So about 9% in less than 2 months. New York Mortgage Trust that I still own. I don't believe I sold anything. Yeah, no, I didn't sell it. So this stock I still own because it pays about 13% dividend per year. As you can see, I'm collecting dividends. I bought initially at 608, and I bought some more at 598. It's trading right now at 550. Thinking of buying some more, but I think I have too much of it though. Don't want to put everything in one place. Got Pfizer that I bought, I believe, at 30.5. Sold at 34. So 11%. So 11% in a matter of weeks, like I think 2 weeks, February 23rd to March 1st. Plus I collected dividends. Qualcomm from 53 to 59.50, so 12% for Qualcomm in April, March. So in less than 2 months, what was it again? 59.50 divided by 53. So 12% in less than 2 months for Qualcomm. Sun Life 47.50 to 43.75 in less than 2 months also. So 8%, 8.5% in less than 2 months. Tahoe Resources from 11.25 to 10.50. That's 7% plus a dividend. So in March, April. So this is a month. In 1 month, how much was it again? 11.25 divided by 10.50. So 7%. Sorry. So 7% plus a dividend in 1 month. So that's not bad. But this stock right now is trading in the fives, and look how much I bought it at. So good thing I sold it. Didn't hold on to it. Sometimes it's good to take some profit and then to be greedy and hold on to the max, because you never know what's gonna happen. So in my opinion, just buy in in your opinion what you think is low, and then sell as soon as you make some profit. It doesn't have to be the most. It doesn't have to be the most profit, because you never know what's the lowest point, and you never know what's the highest point. But you can be close. Twitter bought at 15, sold at 16. Yeah, I was worried about that one. I just wanted to get out. So 6.5% in March, April. So not even a month. So yeah, less than a month and a half. Less than 2 months. Sorry, less than 2 months. Then 2 months, almost 7% with Twitter. VRX. So VRX, I traded it twice. So once I bought at 21, sold at 23. That was 9%, and then another time at 18.95 divided by 18, so 5%. And look at the time frame in 2 weeks. Sorry, not 2 weeks. In less than 2 months. And Exxon Mobil bought at 81, sold at 86. Right now it's trading at 76. Plus I collected some dividends. 1, 2, 3. I collected dividends twice. Bought it in April, sold in January. So it's about 12 months, 8 months about. 86 minus 86 divided by 81, or 86.5 divided by 81. So almost 7% return. So combining all these returns, I'm almost at about 14% for the last 12 months. So from this list here, they're all profitable, except for CVE that I'm still holding on to, Enbridge that I'm still holding on to, but I'm collecting dividends, and HBC that I'm still holding on to. So it feels good making profitable trades, knowing that you were able to guess the lowest point or almost the lowest points. Hopefully it's something that you can sustain year after year. This is something that I was able to do for the past 3 years. I started off day trading, but I lost a lot of money, and then I went to options. I had a really good run with options, but then it cost me a lot. So now I still trade options, but only when I'm very confident that the stock will go a certain direction before a certain time. But now I focus more on big name companies that are not going to disappear. I just watch them, wait till they drop for whatever reason. If I feel like the price is good, just by looking at the chart, by reading some news, I'll buy it, and then I just wait. If it goes up, eventually it's going to go back up. I don't know when, I don't know what's going to make it go up, but eventually it's going to go back up. While I'm waiting for it to go back up, I'm collecting dividends, and when it goes a bit higher than what I bought it at, I sell. So I make a return on the difference between the buying and selling price, and I collect some dividends. If it goes down at least 10% lower than what I bought it at, then I'm going to buy some more. Now if we go to QUESTRADE, the executions are going to show under accounts here. Go to reports, account activity. So let's choose, we're February, so let's do February 2017, or even January 2017. And let's look at my TFSA account, and let's look at trades only and dividends. View all. So here you can see I bought some options. So I bought at 90 cents, sold at $1.10. So that's 22%. That's what I like about options, is that the returns are higher, and the stock doesn't have to move as much for you to make a higher return with options. And that's in like 2 weeks, 22% in 2 weeks. Although it is a smaller dollar amount, it's a higher return, 22% in 2 weeks. And then I bought some more at $1.50, some more forward options at $1.50, and some more over here at $1.50. So I bought twice at $1.50, and then I sold them all together at $1.80. So that's 20%. So I made 22% once in 2 weeks, and then another 20% in about, so that's what, August, sold in September. So in 1 month, I made 20% with forward options. I bought some CIBC options at 8, sold at 9. I think it was, let's see how much time, I think it was the same day, no? So July 12th, sold it July 20th. So in a week, or even less than a week, made about 9 divided by 8. 12.5% in 1 week with options. Then I bought some Verizon shares at 43, sold at 47. I think that was like 2 weeks. Yeah, July 14 to August 1st. So from 43 to 47. 9% in 2 weeks. So not bad at all. Right now Verizon is trading, I believe, in the 50s, but still made some profit. You don't have to make the maximum profit possible, but it's important to make some profit. As long as you keep repeating the process. As long as you're making more than leaving your money in a savings account, as long as you're making more than investing your money in the mutual funds at the bank. Then I bought some Qualcomm at 51.87, sold at 54.25, and I also collected dividends. This was a bad sell because Qualcomm, not even a week later, went up to 64. So I could have made more money with Qualcomm. Regardless, for 54.25 divided by 51.87. So made 4.5% plus the dividends that I collected here, but in a short period of time. And then I bought some Teva pharmaceutical. I bought it twice. I bought once at 16, once at 14, which averaged out at 15, and then I sold it all at 18.25. And this is also, I think, in 2 or 3 months. So sold December 14, bought October 25th, October 5th. So yeah, in 2 months. So 18.25 divided by 15. So 22% in 2 months with Teva. And now here we are with Ford. I bought some Ford shares at 11.20 and at 10.70. Now I haven't sold yet, waiting for it to go up. It's trading, I believe, at 10.70 right now. So in my RSP account with QUESTRADE, I have a small amount here, less than $500. But I buy options with it, so I can make, because the returns are higher. So here you can see I bought some Ford shares some Ford options at 145, sold at 220 in a month and a half. So that's about 51% return in a month and a half with options. Then I bought some Teva options also at 195, October 16, sold it December 15. So exactly 2 months with Teva. I think that was a double. So 395 divided by 195 is 100%. So that's 100% return in 2 months with options. So yeah, so that's what I do. I just follow big name companies. Create a watch list wherever on Yahoo Finance or Google Finance or even on QuestTrade or Investor's Edge. And every day I just a quick browse, see which stocks, which of these big name companies drop for whatever reason. If it looks attractive according to the charts and the news, then I'll buy. I don't go in depth in understanding ratios or I don't do technical analysis either. You could do that if you enjoy it, but I realize at the end of the day, it's the same result, because you don't have all the information anyways. There's experts or institutional investors that trade with a lot more money than the regular investor. They have all the information. They have all the fancy charts and all the fancy programs and softwares. So in my opinion, and what I realize, why go through all the headache of analyzing if at the end of the day you're gonna end up with the same thing, with the same result? The only difference is you're just gonna have to be more patient. If you bought at the wrong price, you're gonna have to wait longer. So I think news is important and charts, looking at the charts. So news is called fundamental analysis and looking at charts is called technical analysis. I don't go in depth though, so you've seen in the last 12 months what kind of returns I've been making with my trades. And this is the strategy that I apply. So I've got maybe 30 trades or 35 trades that are profitable, and only 3 of them that I'm holding. I haven't sold yet, so I didn't lose any money yet, but I'm holding on to them because they're still low. The stock price is still lower than what I bought it at. So yeah, if you enjoy my videos, please like, share with your friends who are interested in investing, and subscribe to my channel. Also, if you're going to open a QuestTrade account for trading, please use my referral code that you'll find in the description below the video, so that we can both get up to $250 after you make your first trade. I also have some other links at the bottom of the video, in the description at the bottom of the video, that might be interesting to you. Talks about how to, any good deals I find, I like to share them basically. Uber referrals or Groupon or Twango, how to get 50% off on almost anything. Credit card referrals that give decent cash back, at least 1% cash back with no annual fee. So check it out. And if you have any questions, or if you would like me to make a video about a specific topic, please leave them in the comments below. I'm open to all feedback. Also, if you want to share any stock tips, you can leave them in the comments. We can check it out. Alright, thanks for watching.